Let me say to everyone good morning and good afternoon, and welcome to today's webinar that will provide an update on the latest development of the IESBA Code of Ethics. Please note that this session is being recorded. Simultaneous interpretation is also available as usually at our events in Albanian, Bosnian, Croatian, Serbian, and Russian. Please click the globe icon and select your preferred language for interpretation. And to ask questions, we invite you to use the Q&A box. We will try to address as many questions as possible during our QA session, which is at the last part of our event. So saying this, let me start our event by giving the floor to Jose Resk, Senior Financial Management Specialist who leads the professional capacity building stream at the Center for Financial and Sustainability Report and Reform for years. So likely he needs no introduction to this audience. And Jose, over to you for opening remarks.
Thank you very much, Natalia. Good morning and good afternoon, dear panelists and participants. On behalf of the World Bank Center for Financial and Sustainability Reporting Reform, I want to welcome all of you to this webinar and to thank you for making the time to be here with us today. We are delivering this webinar as part of the main three programs that we handle at the CFRR, eAssure, Reparis for SMEs, and Pulsar. First of all, I want to extend our sincere thanks to the International Ethics Standards Board for Accountants, IESBA, for partnering with us today. John, Sylvia, Jean, and Elaine, we are grateful for your time, your expertise, and your commitment to making these standards accessible for practitioners, regulators, and policymakers around the world. We very much look forward to hearing from you today. I also want to take a moment to thank Tanya Mushumi from the International Federation of Accountants, IFAC, for her role in helping bring this event together. The accountancy profession has changed profoundly in recent years. When we consider what has happened over the last decade, acceleration of sustainability reporting, the extraordinary pace of technological change, the growing role of artificial intelligence in audit and assurance, it becomes clear that the profession is operating in a fundamentally different environment than it was just a few years ago. And with that change comes a need to revisit the ethical foundations that underpin the entire system. A code of ethics is not something static, but rather a living framework that must evolve alongside the profession it governs. That is precisely what IESBA has been doing, methodically, rigorously, and with a clear sense of purpose. When auditors are truly independent, when their fees are not contingent on other services rendered, when their relationships with clients do not compromise their judgment, public trust in financial information is stronger. At the same time, also, when sustainability assurance is conducted up to a globally recognized ethical standard, investors and citizens can have a greater confidence that what they are seeing it's the true representation of what it is. And when the profession has clear ethical guidance on navigating artificial intelligence and new technologies, it is better equipped to serve the public interest in an era of rapid digital transformation. The revisions IESBA has made to the code since 2018 are substantial. You will hear today about changes to independent standards covering non-assurance services and fees, changes designed to close gaps that were eroding public trust. You will hear about new provisions on group audits, on tax planning, and on the definition of public interest entities, PIEs. Each of these revision reflects careful deliberation and a commitment to setting a global baseline that works across jurisdictions, regardless of the regulatory environment. But perhaps the most important and significant development you will hear about today is the International Ethics Standards for Sustainability Assurance, IESA. This is a landmark. As sustainability reporting becomes mandatory in more and more jurisdictions, the question of who assures that information and to what ethical standard becomes critically important. IESA provides that standard. It is profession agnostic, framework neutral, and designed to serve the public interest in a world where non-financial information is increasingly as consequential as financial information. You will also hear about IESBA work on technology and specifically on the ethical challenges that artificial intelligence poses for the profession. How do auditors maintain objectivity when algorithms are informing their judgments? What does professional competence mean when the tools of the trade are changing faster than training can keep up? These are the questions the technology working group has been grappling with, and we look forward to hearing where that work stands now. We have a packed but well-structured 2 hours ahead of us. The IESBA team will take us through the full sweep of revisions with dedicated segments on sustainability, technology, and adoption and implementation. We will close with a questions and answers session, and I encourage you to bring your questions. The more specific and grounded in your own context, the better. I wish everyone a productive event and a fruitful discussion. Thank you very much. And now I give the floor to Natalia, back to the agenda. Natalia, the floor is yours.
Thank you very much, Jose. Now let me pass the floor to John Reid, Director of the International Ethics Standards Board for Accountants, to introduce his team and start the session. Thank you. John, over to you.
Thank you very much, Natalia, and Jose. Thank you very much for that fantastic introduction and welcoming. We really appreciate that. So yes, my name's John Reid. I'm a director at IESBA. And in terms of this presentation today, sort of the background and some of the work I've been doing at the IESBA since being here, I was involved in the sustainability project and particularly focusing on the sustainability reporting revisions to the code. I also lead our work at IESBA in relation to adoption and implementation, and also involved in some other initiatives as well, but in particular those sort of resonate with what we're presenting today. I'm joined by Sylvia Shremko, who's a principal at IESBA. She has a very long history in the independence provisions at the IESBA, and in particular in relation to today, she led from the staff level in terms of the IESA that Jose mentioned, the International Ethics Standards for Sustainability Assurance, and also the provisions around non-assurance services, fees, public interest entity, and so she's certainly the expert in the independent standards at the IESBA. Jean Viljean is also an IESBA principal, and she's joining today, and she'll be presenting on the technology provisions, and she's been integral in that part of the IESBA's work in terms of the revisions to the code and also the ongoing initiatives that IESBA is undertaking from a technology perspective. And finally, we're also joined by Elaine Cahoon, who's a staff fellow at IESBA. She also has a very long history in independence in terms of her. She's on secondment at the moment, but in terms of her day-to-day job, I guess, but also she's been very integral in the work at IESBA since she's been here for 18 months, particularly on adoption and implementation, also working with Sylvia on some independence aspects and provisions. So it's great to be here. It's an honor to be here, in fact, also with such an amazing representation. I think from what we gathered, there's almost 20 different jurisdictions that are represented today, and the audience are from very various backgrounds, including professional accounting organizations, accountants in public practice, auditors, those that work in business, but also academics and regulators. So it's really great to have you all here and for us to be able to present to you today. So yeah, again, thank you for attending, but also to the WorldBank and for the Centre for Financial and Sustainability Reporting Reform, as well as for IFAC for putting on this event. We really appreciate it. We do understand that different jurisdictions have adopted at different versions of the IESBA code, and this may be for a number of different reasons. Could be related to translation, due process or legislative requirements, and also around the professional accounting organizations and whether they have sort of direct responsibility. So we do understand that all these things do impact the adoption and the rate of adoption. But in saying that, and as Jose said, ethics is really the sort of the bedrock of the profession. And whilst the sort of the fundamental aspects of the code have not really changed in a significant amount of times in terms of the fundamental principles and conceptual framework, but the context in which ethics applies has changed, and in particular over recent times, as Jose mentioned. And especially in terms of things like sustainability and technology. So in terms of today, we will spend a bit more time on the sustainability and technology provisions, and then more of an overview of the other sort of aspects and changes to the code. So essentially, that is really the purpose of today, is to provide you with an update on the significant changes to the code since 2018 and why it's really important to maintain that currency of adoption and to withhold and maintain credibility of the profession in the respective jurisdictions. So anyway, thank you again, and yeah, we're really looking forward to this session. So if we could go to the next slide. So just in the agenda, so initially I'll just give a very brief overview of the IESBA and what we do and around the global adoption of the code. And then Elaine will explore the restructured code that from 2018 as sort of a baseline in terms of where it was and what's changed since then. And then we'll start exploring some of those changes in brief in some of the ones around non-assurance services fees, engagement team group audit, and also looking at tax advisory services. So Sylvia will touch on those. Then we'll go into some more depth on the IESBA revisions to the code relating to sustainability. I'll present on the sustainability reporting revisions, and then Sylvia will go through the international ethics standards for sustainability assurance. And as I mentioned, Jean is our sort of resident expert from a technology perspective, so she will cover off on the technology revisions to the code and the work that the technology working group is doing. And then at the end, we'll spend a little bit of time talking about the IESBA's focus on adoption and implementation, and I guess what that might mean for the jurisdictions that are represented today. And then, as we mentioned, we'll have a question and answer session at the end of the presentation. So if we could just go to the next slide, actually go two ahead if that's okay. To the next one too. Thanks. So yeah, IESBA's mission is really we work for the public interest essentially, and that is around setting high quality ethics and independent standards. So it's to ensure that there's ethical behavior in business and in organizations. So when we talk about that, we're talking about obviously for-profit entities. We're also talking about public sector entities, not-for-profit entities. So it does cover the whole sort of remit of the sectors across the board there. And we're also around informing or increasing public trust in financial, but not just financial, also non-financial information. And more recently, that obviously has been a bigger focus on sustainability. And that's around the proper functioning of financial markets and economies. The board is a very diverse board, and we have global representation. We have an independent chair, Gabriela Figueiredo Diaz, and we have 16 other members from 14 different countries. They also come from very varying backgrounds as well, including some are from the firms, some are from academia, also those in business, jurisdictional standard setters and regulators. So there is a very broad representation on across the members of the board as well. If we could move to the next slide, please. So in terms of the IESBA code, so it does have a very global footprint. It's essentially adopted or otherwise used either through legislation, through regulations or regulators or jurisdictional standard setters, and in some instances, the professional accounting organizations. So there is around about 130 jurisdictions that are on the 2009 or later edition of the code, and around about 100 that are on the 2018 or later edition of the code. And also the Forum of Firms, which represents the 37 international networks of firms, they're all adopted the Code of Ethics as well as part of their requirements. So it is translated into a whole series of different languages, and also the licensing aspects is connected to IFAC. So what we are saying that there are sort of, as I mentioned before, different levels of adoption, and that is clearly represented today in terms of the participants and the jurisdictions that are here today. It also does represent aspects around the difference in the levels of responsibilities that professional accountants have in terms of their responsibility for the actual adoption of the code, and then how that impacts the compliance with IFAC's Statement of Membership Obligation 4, which is around adopting the latest version of the code. And also, yes, the actual adoption definitions have recently been changed by the IFAC, and it may mean that certain jurisdictions that are currently considered partially adopted under the new definitions, which has basically made it an uplift to the 2018 version and beyond, to be partially adopted, that if they're behind that, it can actually be classified as not adopted going forward. So just wanted to raise that as part of the thing, and that's why we're here to sort of present what has changed and what that means to jurisdictions, but also around how the IESBA might be able to assist in terms of adoption and implementation, which we'll cover off at the end of the presentation. But I will pause there and I'll pass over to Elaine to go on to the next part of the presentation.
Thank you very much, John. If we could please move forward to the next slide. So we acknowledge that there's been a lot of changes to the IESBA code, but overall, these changes were designed to respond to evolving risks and stakeholder expectations while reinforcing the code's role in supporting ethical behavior and the public interest. As Jose pointed out, we are really seeing great complexities in the market, rapid change, and we need to make sure that the IESBA code is a baseline that will inspire confidence. The revisions leading up to and following the 2018 restructuring of the IESBA code collectively strengthen areas of the code, and there are many areas that we will not be able to touch on today. However, as John mentioned, if your jurisdiction needs assistance or would like more information on changes from one code version to another, please do feel free to contact any of us here. For example, we've assisted with working with a jurisdiction that was on a version of the 2009 code to try to help them get up to speed. Next slide, please. So the 2018 revised and restructured code was a significant milestone and included revisions from 4 years from 2016 to 2019. It improved the clarity, usability, and navigability, making it easier for professional accountants to understand and apply the requirements, including applicability to both professional accountants in business as well as in public practice. Importantly, it strengthened the linkage between requirements and application material and provided a strong foundation for the subsequent revisions. As you can see here, and again, we have more detailed materials on any of these topics. And so there are a number of significant changes here, including the enhancements to the conceptual framework, non-compliance with laws and regulations, long association, etc. Next slide. I would like to spend a few minutes here on the fundamental principles and the conceptual framework. The conceptual framework provides a structured approach for identifying, evaluating, and addressing threats to compliance with the 5 fundamental principles. In the 2018 code, these fundamental principles have not changed. Integrity, objectivity, professional competence and due care, professional behavior, and confidentiality are still the cornerstone of our ethical framework. But as the world becomes more complex, the conceptual framework is even more critical because not all ethical situations can be addressed through prescriptive rules. Application of the conceptual framework accommodates a wide range of facts and circumstances, including the various professional activities, interests, and relationships that create threats to compliance with the fundamental principles. The conceptual framework assists professional accountants in complying with the fundamental principles and meeting responsibility to act in the public interest. It deters accountants from concluding that a situation is permitted solely because the situation is not specifically prohibited in the code. Next step, please. Slide, please. Thanks. So the conceptual framework is this logical three-step approach. You want to make sure that you identify, evaluate, and address threats to the fundamental principles. So again, this did not change in the 2018 code, but it has been further enhanced, and there were greater linkages to applying safeguards to specific threats. So applying the conceptual framework requires an appropriate mindset and the exercise of professional judgment. PAs are expected to have an inquiring mind, which would include aspects such as considering the source, relevancy, and sufficiency of information obtained, and to take into consideration the nature, scope, and outputs of the activity being undertaken, and to also be open and alert to a need for further investigation or other action. So when considering the source, relevancy, and sufficiency of information, I think John will talk a little bit more about this when we get into technology. But I think we should keep in mind that we want to make sure that there's certain things such as considering new information that may be available, considering the source of that information and whether it may be influenced by bias or self-interest, and whether there could be alternative reasonable conclusions when considering the source of information. We also need to make sure that we exercise professional judgment, and this involves the application of relevant training, professional knowledge, skills and experience commensurate with facts and circumstances. And so the 2018 code also includes guidance for all professional accountants, emphasizing the importance of obtaining an understanding of the facts and circumstances when exercising professional judgment, and guidance for all auditors and assurance practitioners to explain how compliance with the fundamental principles supports the exercise of professional skepticism. In addition, the reasonable and informed third-party test involves consideration by a professional accountant about whether the same conclusions would likely be reached by another party, and that is this reasonable and informed third party. And so I think that that is a really important test, and it states that the reasonable informed third party does not have to be an accountant, but would possess the relevant knowledge and experience to understand and evaluate the appropriateness of the conclusions in an impartial manner. And so the application of the conceptual framework helps to ensure that decisions are not only technically sound, but are also aligned with the public interest. The framework therefore supports consistent and robust ethical decision-making in practice. Next slide, please. One more, please. Thank you. So since 2018, the IESBA has introduced a broad range of substantive revisions across the code that we've listed here. And so in our agenda, we've underlined some of the topics that we'll be able to touch on. But as you can see, there's a number of other very critically important topics that we will not have time to discuss in depth. And so these revisions were developed in response to regulatory developments, stakeholder input, and evolving expectations regarding independence and transparency, and collectively represent a significant strengthening of the international ethics and independence standards. These changes reflect IESBA's commitment to maintaining the relevance of the code in a rapidly changing environment and demonstrates a proactive approach to addressing emerging risks and supporting high-quality reporting and assurance. And so now I'll turn it over to Sylvia to start our more in-depth discussion of select changes.
Thank you so much. If we can go to the next slide, please. So as John mentioned at the beginning of the presentation, I would like to talk about a bit on the international independence standards and the changes to the international independence standards. So since 2018, the IESBA has approved important changes to the international independence standards within the code that apply to audit, review, and other engagements. And the objective of these changes was to ensure that independent standards continue to provide a robust framework and guardrails for auditors' independence. And as we have mentioned previously, these changes will respond to the recent developments, in this case, regarding the provision of services, the evolving technologies, and also the business models of the audit firms. Therefore, in 2021, the IESBA issued revisions to the code and specifically to the international independent standards arising from its project focusing on non-assurance services and fees. And these changes came into effect in December 2022. And these two projects were accompanied by the third one in 2022 with the same importance, that was focusing on the definition of listed entities and public interest entities in the code. While developing these three standards and the changes, the IESBA recognized that there are heightened expectations from stakeholders regarding public interest entities, or just briefly as we call it, PIs. And the heightened expectations regarding the audit or assurance engagement or any other professional services provided to such PI clients. Therefore, the code provides specific and typically more stringent ethics and independence revisions in the case of such PI clients. But what do we actually mean under public interest entities? And that was one of the subject of the revisions, one of the revisions in 2022. In the context of the code, public interest entities are the publicly traded entities instead of the previously mentioned listed entities that was included in the previous version in the code. And this is the publicly traded entities are a broader concept, but of course it captures the listed entities as well. Furthermore, public interest entities are entities whose main function is to take deposits from the public, just like credit institutions, or entities whose function is to provide insurance to the publics, for example, insurance companies. And in addition to those, PI entities are any entity specified as such by laws or regulation on other professional standards in the local jurisdiction. So that's what we call the national PIs. And when deliberating these new terms and the definition of the PI, the IESBA considered and also took into account that these definitions will be applied globally in different legal and regulatory background and frameworks. Therefore, as you could see, these definitions are intentionally a bit high level. And for that reason, the definition of a public interest entity in the code requires the local bodies to clarify these, to be clearer about these categories. So there are some requests for actions in the specific jurisdictions. And these definitions, so these changes regarding the public interest definition will actually came into effect in December 2024. And if we can go to the next slide, please. But so let me talk about a bit more regarding the changes to the provisions and the sections addressing the non-assurance services. The code acknowledged, even in the pre-2018 version, that the provision of services that are not assurance services to an audit or an assurance client might create self-review threats, self-interest threats, or other threats, and it could compromise the professional accountants and its firms' independence. For example, the provision of accounting and bookkeeping services to an audit client or valuation services. Responding to the development regarding the technology and the new service delivery models, the IESBA approved revisions to the code in 2021 to ensure that it appropriately address the threats to independence arising from the provision of this new type of non-assurance services to the client. Of course, since the code is a global standard, it was not the intention to create a full list of prohibited services, or what we usually call a blacklist, which could proven difficult to create such list and also not quite in the public interest at a global level. Also, it is not possible to capture all emerging non-assurance services that might come up later in the future. Therefore, the code provides a more future-proof, more principle-based approach with respect to these non-assurance services. While it sets out specific prohibitions, such as the prohibition of providing accounting and bookkeeping services, it also prohibits the provision of non-assurance services to public interest clients if the provision of such service might create a self-review threat. So that's what we call the self-review threat prohibition in general. It is important to note the scalability of these revisions. Most of the straightforward prohibitions and the prohibition of the self-review threat are applicable only in the case of public interest entities. In the case of non-public interest entities, the code provides more principle-based approach, suggesting safeguards and addressing the circumstances. So it's really, I think, one of the key guiding principles of the code, and these revisions as well are the scalability and proportionality. I wanted to note as well that the changes also eliminate the materiality element that was part of the previous version of the code. Therefore, whether or not a specific non-assurance service can be provided to a client, for example, the valuation services, that does not depend on whether the service has a material impact on the financial statements. This really takes away some of the subjectivity element and provides a more consistent application of the code's provisions globally and worldwide. The new standard on non-assurance services also requires transparency to the provision of non-assurance services to the client, and it promotes the engagement and the communication of the provision of such services with those charged with governance at the client. If we can move to the next slide. So at the same time, the IESBA launched its project on non-assurance services, the board also started a project focusing on the fees for the specific professional services, most importantly, the audit fees. And of course, it doesn't mean that the board meant to address or cover anyway the amount of fees in the market for audit engagement, for example, setting a minimum fee. The board simply recognized that, for example, lowballing the level of audit fees or paying unreasonably low fees could create threats to the fundamental principles and to the independence, such as the professional competence and due care. For example, when the engagement team will have no sufficient resources to perform the engagement in compliance with the relevant standards, that could create threats. The revisions to the fees section in the code, among others, also cover the threats to independence related to the firm receiving fees from services other than audit that could influence the level of the audit fees. For example, engaging to perform various non-assurance services to the audit client that could impact the level of the audit fees, and the audit might simply become a commodity. The new revisions also address the threats to independence created, for example, by fee dependency from one client, when the auditor generates significant amount of its revenue from the client, and that could create undue influence. So the revisions make a step forward to tighten the provisions that already existed in the previous version of the code. And now the revised code also recognized the importance of transparency of fees as an element that could address independence issues, especially independence in appearance. Therefore, in the case of public interest entities and clients, the code requires communication of fee-related information to those charged with governance of the client, and also disclosure to the public in certain cases. If we can turn to the next slide. Thank you. And While developing the revisions to the independent standards, international independent standards, or any other revisions, as a matter of fact, coordination with IASB, the International Auditing and Assurance Standards Boards, the sister board of the IESBA, the coordination was always an important element of our board's work. And a great proof of such effective coordination is the revisions to the code related to the definition of engagement team and group audit independence. The IAASB previously approved revisions to its quality management standards and to ISA 220 revised, and also it developed a new ISQM1. And these changes amended the definition of the engagement team to reflect the new service delivery model and the fact that individuals who perform procedures on the engagement are part of the engagement team, irrespective of their location or their employment status, or whether they are part of the firm actually or not. In relation to that, there were questions raised by stakeholders on the relevant ethical, including independence requirement in the case of audit, especially group audit engagement, especially when the firm uses the audit work of engagement team members on component audit firms outside the audit firm's network. So against this background, the changes arising from the engagement team and group audits project establish new defined terms and revise a number of existing terms, such as engagement team, audit team, group audit team, component auditor firm, and so on. The changes also clarify and enhance the independence principles that apply to group audits, such as individuals involved in the group audit team and the component firms. And it also sets out the process to address any breach of an independence provision at the component auditor firm. And these changes are effective from 2023, from December 2023. And if we can turn to the next slide. And apart from the audit and other assurance engagement that I was mainly talking about, the IESBA code also includes comprehensive ethical guidance when a professional accountant provides any other professional services to their client, whether they perform it as an employee, as professional accountants in business, or as a professional accountant in public practice. And in that regard, the IESBA published in 2024 its tax planning and related services standards that provides a principle-based framework and the global ethical benchmark applicable to tax planning services and activities provided to the client. It really establishes a consistent point of reference for all professional accountants, as well as other tax professionals who are also strongly encouraged to use these standards. This standard really aims to stimulate tax professionals, professional accountants, to consider the broader impact of their advice beyond the legal compliance. It also provides an ethical compass to navigate complex tax planning challenges and dilemmas, ethical dilemmas, where the legality of tax planning is unclear. So really in those gray areas. The standards reinforces, of course, the compliance to fundamental principles of integrity, objectivity, and so on. And finally, it encourages transparent documentation and the communication of the advice. So these new standards, I believe, is especially relevant in the current context, the context of rising public scrutiny of tax avoidance schemes, and which can harm companies' credibility and corporate reputation, but as well, it could harm the public interest. And these standards is effective for tax planning services beginning after June 2025. And I think in these last couple of slides, I provided quite a lot of information, and you may appreciate that in the interest of time, we cannot really go into the details, but I would like to encourage everybody to visit our website where you can find really useful and up-to-date supporting materials to the changes I have just mentioned. And with that, I pause here and I turn back to John.
Thank you very much. So if we could go to the next slide. So now we plan to delve a little more deeply into sustainability, and Silvia and I will present on this part of the presentation. And just to make it clear, there's two separate sort of aspects of what the IESBA did. There was specific revisions to the extant code specific to sustainability reporting, so those that are involved in sustainability reporting or sustainability disclosures. So that can include like those either in business that are preparing those disclosures for a company, and what are the ethical aspects that relate to them. And so I'll touch on those aspects. And then Sylvia will go into the IESA, which is the International Ethics Standard for Sustainability Assurance. So that's for the assurance providers. So there's two sort of very distinct aspects in terms of the work that the IESBA did. So first of all, what was the sort of the impetus for the IESBA's work in sustainability, and why does ethics matter for sustainability reporting and for sustainability assurance? So essentially, there was really a confluence of factors for a perfect storm. So what do we mean by that? Well, there was investor demand for sustainability information, and that's been rapidly increasing. I think at the moment, or in recent years, there's about 30 trillion US dollars invested in sustainability related assets, and that's expected to increase to about 40 trillion in the next decade. There has been increased demand to support capital allocation by investors, and also other decisions by stakeholders, lenders, customers, employees, regulators. Also, there's been greater availability of sustainability information and the development of reporting frameworks such as the ISSB standards, the ESRS, GRI, all of these different sort of frameworks. Mandatory reporting has been coming into play in many jurisdictions. There's emerging fields. It's also novel reporting, including also the aspects around the value chain. And then coupled with that, there's often immature systems and controls and data sources within organizations, which can create unique risks from an ethical perspective. Including things like, the potential for greenwashing, greenhushing, etc. And also with that, there's the complexity of sustainability information. It's often quantitative, it's often subjective, which does create a number of ethical challenges too around professional judgment and discretion and those sorts of factors. Also, the quality of sustainability information is really dependent on having an ethical mindset and conduct of preparers. So the preparers are often sort of referred to as that first line of defense around unethical behavior in terms of their, I guess, access to their controls and the financial, non-financial information, and their sort of influence over those things does sort of lend the idea of around being a part of that governance defense mechanism. So what that means really is that, integrity, objectivity, professional competence, all of those sorts of fundamental aspects of the accounting profession are critical attributes when dealing with sustainability information from a reporting and also from an assurance perspective. And again, like I mentioned, there are, real risks of unethical behavior and things like greenwashing due to that subjectivity. There's often pressure around meeting sustainability targets and goals, all those sorts of things. It can be based on incentives, and there can be conflicts of interest. So all of these things can sort of impact the ethical aspects of the preparer and assurer. In terms of independence assurance and whether that is also fundamental for credible disclosures. So there are risks to practitioners' independence, things like assuming management responsibility or sustainability related non-assurance services, various other aspects, and Sylvia will go into more details around that. And the last one there is saying, ethics is a foundation to trustworthy sustainability reporting and assurance. there's obviously a very pressing public interest need to ensure that the information is trustworthy, it's comparable, and therefore capable of being assured. So that sort of comes back to the sustainability reporting aspect, as well as, yeah, and then into the insurance too. And ethics really does underpin that trustworthy sustainability reporting and assurance, and the independence of the assurance provider is also critical too. And then the other aspect is that obviously the sustainability reporting frameworks are very strong and robust, and they've gone through a very arduous due process. And but they don't specifically deal with the actual behavioral aspects about when you're actually applying those standards. And those standards are applied obviously by real people in real life situations, and there can be things like bias, conflicts of interest, or pressure in terms of, trying to, for example, make the green information look better or whatever it is. So there's all these sort of behavioral aspects which the sustainability reporting standards don't address, but that's where the ethics standards come in to address those behavioral aspects. Next slide, please. So anyway, as a result of all of those factors that were impacting the potential ethical issues and considerations, the IESBA took a deeper look into and consideration of sustainability reporting and assurance situations, and to ensure and amend the code that it remains fit for purpose for sustainability reporting and assurance. And essentially, if you look at the diagram on the left-hand side of the slide, the sustainability reporting ecosystem really does consist of a trilogy of standards. So you have the sustainability reporting standards. They provide a standardized approach to reporting reliable and comparable information. And I mentioned some before, so the ISSB standards, CSRS, GRI, those sorts of things. So they sit there to create that reliable, comparable information. And then you have assurance standards, and they provide a standardized approach for undertaking independent assurance to increase the credibility and trustworthiness of the sustainability information. So obviously example would be the IAASB's ISA 5000 as that sustainability assurance standard framework for these types of engagements. And then you see at the bottom of the diagram, you've got ethics and independence, and they really do underpin and ensure that they focus on ensuring that the practitioners, whether at reporting or the assurance side of things, are fostering the right behaviors and actions to ensure that the sustainability information is trustworthy and it's not misleading. So basically, they sit alongside and they really are foundational to the global ecosystem. So essentially, another way of putting it is it's kind of like a three-legged stool. And if you take one of those legs away, so if you take away the ethics, then the stool doesn't really stand up. So there really is a necessity for all of those three aspects to ensure that you have that trustworthy and credible information from a sustainability perspective. So basically, the IESBA addressed our part of the ecosystem through three separate sets of standards. So there's the ethics standards for sustainability reporting, which I'll address shortly. Then we have the ethics and independent standard for sustainability assurance, which is the IESA, which Sylvia will go through. And then Sylvia will also cover off on a separate set of standards on using the work of an external expert, but they really do encompass within the IESA those expert standards, and they also relate to sustainability reporting as well. So we went through that process, and then they were approved in December 2024, and then we received the Public Interest Oversight Board certification in January 2025. At the same time, the IOSCO issued a letter of support and called on its members to apply or otherwise be informed by the IESA when considering ethics and independence requirements. And we also launched these jointly with the IAASB in January, and because there's a really high level of interoperability between the IESBA and the IAASB standards. If we could go to the next slide, please. So I just wanted to cover off a little bit about the sustainability reporting revisions to the IESBA code. You can go to the next slide too, please. Thank you. So these revisions they actually change and enhance parts 1, 2, and 3 of the IESBA code. And as I mentioned before, these were separate to the IESA, although they were issued at the same time and they're part of the same package, but they are a separate set of standards because this is impacting, like I said, those that are preparing the sustainability disclosures. So essentially, as I mentioned, the quality of sustainability information really does rely on having the appropriate mindset and conduct of those that are preparing the information as that first line of defense. And we basically developed them for a number of reasons. Like I mentioned, there's different reporting frameworks, different novel and new ways of doing things, and that can impact professional competence and due care. There's also a lot of discretion and professional judgment within the professional standards. So these standards help practitioners to know what to do when they are faced with those sort of elements of professional judgment and discretion. The complexity of the sustainability matters and the emerging sustainability fields. There's also a lot of uncertainty in the complexity and uncertainty and the subjectivity of the information and the qualitative nature of the sustainability disclosures. They're also often forward-looking information, which is often integral to the sustainability reporting. But again, these all come with professional judgment, discretion, all those sorts of aspects. Often there can be pressure, it could be from employers and investors around meeting sustainability goals. And the systems within the organization may not be mature, and they, can complicate the reporting because there's potential that you might have to rely on information where you don't have a full confidence in it. So that can create issues around over-reliance on information. And that's even further complicated by the fact that sometimes the information needs to come from the value chain again. So all of these things, they potentially create opportunities for greenwashing or green hushing, all those sorts of things. So essentially, that's why we've developed these reporting standards. And in terms of the main characteristics, there's really sort of 4 sort of aspects to that. So firstly, the revisions, they build on the code's existing robust provisions. So they make sure that they're coherent with the overall code and are recognizing that there are existing provisions that are well known and used, and that those provisions are really relevant to financial reporting and non-financial reporting, including sustainability. The revisions, they added a series of different examples or amended examples to more readily reflect the realities of sustainability reporting. So we went through a process there of we had a sustainability reference group and which were experts in the sort of field of sustainability reporting and assurance, and helped to develop a number of different examples, etc., to put into the code reflecting those aspects. And they also they aim to maintain the integrity of the code, as we only really made revisions to the code where we really thought it was necessary. So essentially, there was very minimal changes to requirements. It was really around guidance and assistance around how to apply the existing provisions in a sustainability perspective or sense. And it's specific to sustainability information, so as to ensure the code remains fit for purpose. The third thing is, while these provisions are for professional accountants, they potentially could be used by those from outside the profession. There generally is a sort of public expectation that all preparers of sustainability information, whether they're professional accountants or not, that they should be subject to the same high level of standards. In saying that, our standards do only apply to professional accountants in terms of the sustainability reporting, but potentially they could be used on a voluntary basis from those from outside. And the final thing I wanted to capture was just that they have been developed to be framework neutral, which is consistent with the existing code. It's there that applies to any particular framework that is used. Meaning, yes, so it's neutral. It can be used with any particular reporting framework, whether it's ISSB, GRI, ESRS, etc. So it's relevant to any of those types of all those types of frameworks. But essentially, the ultimate goal was to build and reinforce public trust in sustainability information so as to benefit consumers that rely on the information, investors, where they need that transparent and fairly presented information to inform their investment decisions. The public can be impacted. Preparers themselves often will face challenges around pressure, biases, etc. So it should be able to assist them in how to address those aspects as well. And yeah, that's really all I wanted to cover on sustainability reporting. And I'll pass back to Sylvia to go through the assurance aspects.
Thank you so much. So if you can move to the next slide. So yes, as John mentioned, I will talk about the international ethics standards for sustainability assurance. So something that we are covering, the sustainability assurance aspect. And as Jose mentioned in the opening remarks, this is really a landmark of a new standards that we also see it that way because as it was discussed before, it's an important part of the sustainability reporting ecosystem, and it's really like the basis or the guidelines. And we believe it's a really important achievement for IESBA to have that standards in such a rapid space. And what was really the background of the assurance standards? So back in, I think it was 2021, the International Organization of Securities Commission, so the IOSCO, and also other regulators and organizations such as the FSB, made a call to the IESBA and the IAASB to develop profession-agnostic ethics and assurance standards for sustainability assurance engagements. And the intention was to create a global baseline that could be used by all assurance practitioners, irrespective of their professional background, and really to avoid the fragmentation of standards, the fragmentation of global standards, but also national and global standards. And with that, with a global baseline, the users of the sustainability information can be really assured that whoever provides the sustainability assurance engagement, that practitioner is subject to the same robust ethics and assurance standards. So again, against this background and these calls from regulators, the IESBA issued the International Ethics Standards for Sustainability Assurance, in short, what we call the IESA, in 2025 January. And the IESA was developed in close coordination with the IAASB to ensure that IAASB's ISSA 5000, so the assurance standards, and the IESA, so the ethics standards, are fully interoperable. And as John mentioned, the ISA is also complemented by a new standards on the use of the work of external experts. And I will talk about the relevance and the characteristics of that standards regarding external experts a bit later. But first of all, if we can move to the next slide, please. What are the characteristics of the ISA? And first of all, the standards, the ISA is equivalent to the ethics and the independent standards for audit engagements. Recognizing the public interest in sustainability, the IESBA held and still holds the premise that sustainability assurance engagement on sustainability information must be underpinned by the same high standards of ethical behavior and independence that apply to the audits of the financial statements. And with that in mind, the IESBA developed the IESA to mirror and to be equivalent to the ethics and independence standards that apply to audit engagements, with certain but limited exceptions. Secondly, the IESA is a standalone standard. It is housed in a separate new part of the code, Part 5. And this standalone approach, we believe, makes it easier for those who are not familiar with the code yet to find all the provisions applicable to sustainability assurance engagements at the same place. Meanwhile, the IESA is still part of the code, and it demonstrates that it lies on the same robust ethical principles that the IESBA code already represents. And also, as I mentioned before, the IESA is profession agnostic. The IESBA recognized that sustainability assurance engagements have been historically provided by assurance practitioners from all kind of profession, for example, engineers. And it is actually in the remit of the specific jurisdiction to determine who is allowed to provide the sustainability assurance engagements. So if the specific jurisdiction decides to open the market to all practitioners, not only for the auditors or professional accountants, the ISA is there for all. And it applies to all sustainability assurance practitioners who carry out the engagement, irrespective of their professional background. And for that specific reason, the standards were developed in a way that is meant to be understood and applied by all practitioners, and it uses more neutral and sustainability specific terms. Finally, the standard is framework neutral. So it was developed in a way that the ethics standards and the independent standards can underpin any reporting or assurance framework used to prepare or assure the sustainability information. And if we can move to the next slide. And this slide is specifically useful, and I think it's really well demonstrates the current structure of the IESBA code. So as you can see, parts 1 to 4 of the code on the left-hand side is really part of the current code, the extent IESBA code, and it applies to professional accountants. So the revisions that we have just mentioned before were made in these parts 1 to 4 of the code. And then the part 5, the IESA, is really sits within the structure, but it is a separate standalone part. But let's see actually let's turn to the scope of the IESA and the engagements it covers. On the next slide, please. First of all, the IESA itself also consists of two standards, an ethics and an independent standard. The ethics standards set out the fundamental principles and the framework for expected behavior from sustainability assurance practitioners. And those standards apply to all sustainability assurance engagements, irrespective of the type of the assurance, so reasonable or limited assurance, or irrespective of the professional background of the sustainability assurance practitioner. In addition, the IESBA was of the view that adhering to high standards of ethical behavior only when performing these sustainability assurance engagements for the client might not sufficiently safeguard stakeholders' confidence in the practitioner and in the public interest at large. The IESBA believed that it would be important to hold the practitioner to the same high standards of ethical behavior with respect to any other professional services they might provide to the same client, not just these specific assurance engagements. Therefore, the ethics provisions in the IESA apply not only to the sustainability assurance engagements, but also to any other professional services the sustainability assurance practitioner provides to the same client. But on the other hand, with respect to the independent standards, the IESBA agreed to a more proportionate approach. The board believed that requiring the application of independence provisions that are equivalent to audit engagements to be applied to all sustainability assurance engagements would create too much burden, especially for the smaller firms. Therefore, the independent standards in the IESA in Part 5 focus only on sustainability assurance engagements with the same level of public interest as audit of financial statements. And these are sustainability assurance engagements where the sustainability information is developed in accordance with a general purpose framework, for example, IESB's standards. And the sustainability information is required by law or regulation or otherwise publicly disclosed to support decision-making by investors or other users. So these two criteria need to meet at the same time. And by the way, this approach to have different level of independence standards to different engagements is in line with the extent IESBA code, because the international independence standards in the extent code also provides different independence standards for audit and review engagements in Part 4A, and for assurance engagements that are not audit and review engagements in Part 4B. So I think that what's important to emphasize that the IESBA wanted to follow a scalable and a proportionate approach regarding the determination of the scope of the ethics and also the independence standards. However, that doesn't mean that the IESBA code wouldn't provide independence provisions in the context of the other sustainability assurance engagements that are not captured in the independence standards in IESA, such as assurance engagements where the sustainability information was developed in accordance with the special purpose frameworks. For example, reports that was developed for regulators or management only. In the case of these other sustainability assurance engagements, the independent standards in Part 4B in the extent code applicable to assurance engagements other than audit continues to apply to professional accountants. And sustainability assurance practitioners who are not professional accountants are also encouraged to comply with the provisions in Part 4B. If we can turn to the next slide, please. I would like to talk about the international independence standards in the IESA. One of the key objectives of IESBA sustainability project was that the same robust ethics and independence standards need to underpin the assurance of the sustainability information as the audit of the financial statements. Therefore, the premise of IESBA's work while developing the independent standards in the IESA was that the relationships and the interest and circumstances that might create threats to independence in the context of an audit engagement might also create threats in the context of sustainability assurance engagements. Accordingly, the independent standards in the IESA addresses the same areas that the independent standards in the Part 4A in the extent code applicable to audit engagements, such as financial relationship, business relationships, or the provision of non-assurance services that I had talked about earlier in my presentation. However, the independent standards in IESA goes beyond these specific relationships and interests and recognizes that there are some threats related to the sustainability specific characteristics of these engagements. And what are these specific characteristics? For example, that the sustainability assurance engagements and the audit engagements focuses on different subject matters, namely the sustainability information versus the financial statements. And there are some differences here. Therefore, the IESA provides define the sustainability information as a first step, but also provides specific sustainability related terms and examples. The other difference is related to the reporting boundary. So in the case of sustainability information and sustainability assurance engagements, there are information from the value chain as well. So in the context, for example, a group sustainability information, there might be components that are not within the financial statement, but there are components in the value chain. And for the sake of the engagements, the firm might perform assurance engagement at a value chain component. So the new standards, the new IESA also addresses these situations when assurance work is performed at a value chain component. But again, it was one of the guidelines as well that we remain scalable and be proportionate and recognize the challenges related to getting information from the value chain compared to getting information from the components within the group. The other element is that the ISA recognizes that in the case of sustainability assurance engagements, the practitioner usually or tend to use information or assurance information performed by another practitioner. A practitioner on whose work the firm has no sufficient or appropriate direction and supervision. But these practitioners who are not component practitioners, they already perform the work. So it's in the interest of the practitioner and also in the client that the firm be able to use this information. So the ISA really sets out the relevant ethical requirements for the practitioner when they intend to use the work of these another practitioner. The ISA also recognizes, as I mentioned, that in the case of non-assurance services, there might be threats related to the non-assurance services impacting the sustainability information, but not the financial statements. Therefore, although we use the same examples and services addressing the similar non-assurance services and in the case of the independent standards for audit engagements, there are some differences. For example, instead of accounting and bookkeeping services, the ISA focuses on the sustainability data and information services, or it addresses advisory services on forward-looking information, which is one of the specificities of the sustainability services. So these are the new elements. And beyond that, the ISA also recognizes that there are situations when the auditor or the practitioner or the firm providing the audit engagement, but also the sustainability assurance engagements to the same client. And providing these two services at the same time might raise some independence issues or threats to independence. And the ISA intends to address such topics or such circumstances, such as when fees received for audit and for sustainability assurance engagement from the same client, or when individuals and the practitioner participates in both engagements. And in that case, there is a question around how to evaluate the long association with the client. So this is really just to demonstrate that while there is equivalence, there is also it is also going beyond and recognizing the specificities of the sustainability. And if we can go to the next slide. Although John already mentioned, but I would like to talk in a bit detail on the effective date of the ISA. So the ISA are effective for assurance engagements or sustainability information for periods beginning on or after December 15, 2026, or as at a specific date on or after December 15, 2026. And this effective date is aligned with IASB's ISSA 5000 standards to ensure the interoperability of these two standards. But during the deliberation of the ISA, especially while developing the independence provisions for value chain components, there were concerns from stakeholders around the developing regulatory environment and the reporting landscape in relation to the value chain and the value chain components. And since the 2024 approval of the standards, we can indeed observe changes and in some instances deregulations regarding the sustainability reporting. And responding to such concerns, the IESBA agreed to provide additional time to support and facilitate market transition to the independence regime applicable specifically to the value chain components under the ISA. And this extended period can really enable the IESBA, also in coordination with IASB, to monitor the evolution of assurance practice and consider the need for any response in relation to the value chain component provisions in the light of these or potential new developments. So accordingly, the IESBA determined to allow the option for a longer effective date, but only for the provisions applicable to the assurance work performed at the value chain component. And these provisions will be effective after July 1st, 2028. However, that doesn't mean that the practitioners needs to do nothing, so to say. There are still some requirements in place if the firm decides to use the deferred effective date with respect to the value chain components. The firm or the firm who performs the assurance work at the value chain component should still apply the conceptual framework with respect to that work. Plus, the firm needs to comply with transparency requirements, needs to be transparent about using the deferred effective date. So this is really, again, something that we wanted to provide as a response to the stakeholders, and recognizing that this is still really a moving area, and there are still changes to the underlying reporting and assurance standards. And if we can go to the next slides. John has also mentioned, and I also referred to that apart from the ethics standards for sustainability reporting and the IESA, the IESBA also approved a new global ethical framework for using the work of external experts. Of course, external experts are not part of the engagement team, are not part of the audit team, so they are external in that regard. And the use of external experts, of course, is not a new issue. It's not a new phenomenon. But due to the increased use of technology and the demand for sustainability information, the use of external experts has become even more relevant. So this new framework in the code was introduced in the context of all professional activities and services of the professional accountants, not only in the context of sustainability assurance engagements, but given the nature of the engagements, it plays a critical part in the IESA as well. And this new framework becomes operative when the professional accountant or the sustainability assurance practitioners do not have sufficient expertise to perform the specific engagements, whether if it's an audit engagement, sustainability assurance engagement, or other professional service. And they determine for that reason to use the work of an external expert to deliver the work needed for the professional accountants or the practitioners' purposes. But what is new in this framework? First of all, the new provisions clarify the definition of expert and expertise, and they distinguish the work of experts from the work of other individuals or organizations providing information for the general use, really. The framework also provides clear guidance for professional accountants and sustainability assurance practitioners when they evaluate whether to use the work of an external expert. The guidance focuses on the external expert's competence, capabilities, and objectivity. The professional accountant or the practitioner cannot use the work of an external expert if they do not meet the competence, capabilities, and objectivity requirements, or simply if the practitioner cannot determine whether they would meet them. Similar to other parts of the code, in the case of audit and assurance engagements, recognizing the heightened public expectations concerning such engagements, there are additional objectivity requirements to evaluate the interest, relationship, and circumstances based on the independent attributes, such as the expert's financial interest or business relationships, and so on. Finally, the framework also includes provisions to help identify, evaluate, and address the potential threats arising when the professional accountant or the practitioner uses the work of an external expert, such as threats related, for example, to the over-reliance on the external expert's work. And this new framework is fully interoperable with the new sustainability standards as well. And it is also effective from December 2026. And I would stop here regarding the sustainability part. And I think I would turn to Jean to continue with the technology provisions.
Thank you, Sylvia, and hello to everyone. In this section, I will be covering the technology-related updates to the IESBA code and discuss the initiatives being undertaken by the IESBA through its technology working group. So if we can move to the next slide, please. So let me begin with the technology-related revisions to the IESBA code. So the IESBA recognizes both the importance and the urgency of addressing ethical implications of the digital transformation in the accounting profession. Technology is no longer something on the periphery of the profession. It's actually now deeply embedded in how we make decisions, how information is generated, and how assurance is being delivered. So in response, the IESBA launched a multi-year initiative starting already back in 2018, which resulted in revision to the code that was certified by the POB in April 2023 and that actually became effective in December 2024. So these revisions were developed using a principle-based approach, ensuring that they remain relevant even as technology evolves over time. So at the core, the revisions aim to guide the ethical mindset and behavior of professional accountants, ensuring the code remains robust and adaptable, and ultimately maintain trust in both financial and non-financial information in a digital environment. We all know technology creates opportunities. However, it also introduces new ethical risks. It adds greater complexity and even some higher expectations of the profession itself. So let me highlight some of the key aspects of the provisions. So firstly, the revisions emphasize the importance of professional accountants' competence, so understanding the technologies that are being used, complying with the fundamental principles, specifically around confidentiality, as well as leadership imperatives of the digital age. Secondly, the revisions include examples of facts and circumstances relating to the use of technology that could potentially create a threat for a professional accountant when they are doing professional services or undertaking professional activities. So some of these facts and circumstances to include, for example, the data that's being available might not be sufficient for the effective use of that specific technology, or the technology might not be appropriate for the purpose for which it is being used. Also important to note that these revisions highlight complexity as a factor to consider when exercising professional judgment. So thirdly, a critical principle is that the professional accountant remains responsible for the output, even when it's generated by technology. So when a professional accountant intends to use the output of technology in the course of the professional service it's providing or the professional activity, the professional accountants need to determine whether the use is appropriate for the intended use. So factors that is included in the code that can be considered is the nature of the activity performed by the technology, or the expected use, or the extent of the reliance on the output of technology, or even whether the technology is used, that is being used has been appropriately tested and evaluated for the purposes being intended for. So fourthly, these revisions strengthen the auditor independence side, specifically in relation to when technology is being used in performing professional activity for an audit client. And also, it notes that close business relationships could be created depending on the facts and circumstances, and this could create potentially some threats that should be considered. And finally, the revisions also apply to assurance of non-financial information. And this is particularly important as technology plays a growing role in sustainability reporting. If we can go to the next slide, please. So to support the revisions, the IESBA has developed a range of practical resources. These include
2 fact-finding reports on the impact of technology. And there's a dedicated web page or a focus page on the IESBA website that includes a number of guidance materials. And some of these guidance materials, for example, is guidance on applying the code's conceptual framework in dealing with technology-related independence scenarios. Or there's also a publication on ethical leadership in a digital era with real-world examples. Many of these publications has been developed in collaboration with others, and one of this is also 2 installments in collaboration with IFAC that was developed, as part of the Exploring the IESBA Code series. So the Exploring the IESBA Code series specifically intends to promote the awareness, adoption, and implementation of the IESBA Code. And those 2 installments relate to the technology landscape as a whole, but also specifically around AI. All of these resources are designed to help practitioners move from principles to practice. We can move to the next slide, please. So the IESBA remains committed to navigating the future and to ensure that the code remains fit for purpose and continues to serve the public interest. This is supported through the IESBA's Technology Working Group, of which the objective is to support awareness, adoption, and implementation of the technology-related revisions. The Technology Working Group is also monitoring emerging developments, identifying new ethical challenges, and creating awareness of ethical issues and challenges. So for 2026, the work plan of the Technology Working Group include developing guidance, and this can consist of new non-authoritative materials or updating existing non-authoritative materials where appropriate. The Technology Working Group also conducts environmental scanning through their Technology Experts Group, which they meet with on a regular basis. The Technology Working Group also arranges board education sessions that is done during the IESBA board meetings on technological developments. And that would be depending on technology developments that need to be brought under the attention of the board. And as mentioned by many of my colleagues, there's a close coordination with the IWSB, specifically respective with the technology workstream, as both of our boards are moving forward on these projects. One of the thought leadership aspects that the IESBA launched actually this year is a podcast series called Decoding Ethics. And 3 episodes has been launched already, with the first one being a special episode based on the Lisbon conference and a panel discussion that took place on ethics and technology back in September. The second episode deals with quantum computing that was launched in February, and this month was around artificial intelligence. So this podcast is aimed to building awareness and understanding of ethics in this technology-driven environment. So if we move to the next slide, I actually want to touch a little bit further on artificial intelligence. And no technology presentation is complete if we don't talk about artificial intelligence. So we all know AI presents significant opportunities for the profession. It can enhance efficiencies, improve insights, and even enable better decision-making. But at the same time, it introduces ethical risks, many of which may not always be immediate visible. So I'm going to unpack a few of these. So first is bias and discrimination. So AI systems are only as good as the data that they are being trained on. If that data reflects historical biases or incomplete information, those biases can be reinforced, amplified, and embedded into decision-making processes. What makes this particularly challenging is that these biases are often not transparent. So, as a professional accountant, you need to be alert and ask questions such as, is the data representative? Are the outcomes explainable and fair? A second one is misinformation and unreliable outputs. AI tools, can we go back to the previous slide, please? Thank you. The second one, as mentioned, is misinformation and unreliable outputs. AI tools, specifically Gen AI, can produce outputs that appear highly credible, but maybe in fact be inaccurate, incomplete, or entirely fabricated, hallucinations as we know them. And this can create this risk of over-reliance. So in a professional context, relying on incorrect outputs can have very, very serious consequences. So the key message here is that AI outputs could not be acceptable at face value, but must be evaluated critically. A third component is intellectual property concerns. AI systems may use copyright materials in training, generate outputs that resemble existing content, or even create uncertainty around ownership. So it raises questions on who owns the output. Is it permissible to use or reproduce? And are we unintentionally infringing on any rights? So this is the area where professional judgment must complement legal considerations. Confidentiality and data privacy is very, very important, especially as we as professional accountants deal with sensitive information on a daily basis. Risks including of inputting confidential data into AI models, data being stored, reused, or exposed without full awareness, if it's done through a service provider, for example, or even cross-border data transfer issues. This speaks directly to the fundamental principle of confidentiality. So, as a professional accountant, we need to ask, where is the data going? Who has access to it? And how is it being used? And perhaps one of the most fundamentally aspect is accountability. AI can blur lines of responsibility. So if an AI system produces incorrect output, who is accountable? The developer, the organization, or is it the professional using it? The code is very, very clear on this point. The professional accountants remains responsible for the work that they perform, even when they're using technology. This means AI can be used as any way to outsource our ethical responsibility. So what does this all mean for the professional accountant? The code emphasizes 3 key behaviors. That inquiring mindset, Elaine mentioned it earlier, not taking outputs at face value, professional skepticism, professional judgment, actively questioning and validating information, and then also being aware of bias, not only those of computers, but also those of humans. If we can move to the next slide, please. So beyond the revisions of the code, the IESBA also produced some guidance on this critical question: how do we build and use AI systems ethically in practice? Because it's one thing to understand the risks, but it's totally different to operationalize ethical behavior in our day-to-day work. So within this document, and the link is included in the slides, there's 5 key principles that I want to talk to. So the first principle is understanding the system. Professional accountants need to have a sufficient understanding of the data that's being used, how the model operates, and its limitations and potential unintended consequences. It doesn't mean that we as professional accountants need to become a data scientist, but it does mean we need to ask the right questions. What data is the model being trained on? Is it complete, relevant, and reliable? What assumptions are built into the system? These are only a few questions. So for example, if an AI tool is being used to analyze financial trends or flag anomalies, we need to understand what the pattern is looking for and what it might be missing. So, and this speaks directly to the principle, the fundamental principle, professional competence in due care. A second aspect is controls and reliability. Before relying on AI outputs, there needs to be confidence in the inputs going into the system, the control environment around it, and the monitoring mechanisms in place. In other words, are there validation checks? Is the system tested regularly? Are outputs reviewed for reasonableness? A useful way of framing this is, would you be comfortable in defending the output in an audit, regulatory or public setting? If the answer is no, then future validation is needed. The third principle is maintaining this human in the loop. AI should augment, not replace, professional judgment. This means humans remain responsible for reviewing outputs, exercise judgment, and make final decisions. A practical way to think about this is AI can inform our decision, but it should not make the decisions independently in a professional context. The fourth principle, and I alluded to it at the beginning, is asking those right questions. Competence in the digital age is not just about the technical knowledge, it's also about challenging the outputs, identifying inconsistencies, and ensuring that the tools are fit for purpose. For example, does this output make sense in light of other evidence? Are there anomalies that need further investigation? Is this tool appropriate for the specific task? And then the fifth principle is continuous learning. AI and related technologies are evolving very, very rapidly. So knowledge can quickly become outdated, ethical risks or risks in general can change, and new tools can introduce new challenges. This means professional accountants must stay informed about emerging developments, engage with guidance and best practices, and invest in ongoing training. So to conclude, we are definitely at a pivotal moment in the profession. Technology is not changing the work that we do, it's reshaping how information is created, analyzed, and trusted. But while the tools are evolving rapidly, one thing remains constant. Ethics is the foundation of the profession. The IESBA the technology-related revisions are designed to ensure that professional accountants are equipped to navigate complex, technology-driven environments, and most importantly, that trust in both financial and non-financial information is preserved in an increasingly digital world. But ultimately, trust is what underpins everything we do. As we adopt new technologies like artificial intelligence, data analytics, and automation, the challenge is not simply whether we can use the tools, but whether can use them responsibly, transparently, and in the public interest. I will pause here and hand over to Elaine to cover the next topic. Thank you.
Thank you very much, John. And I must say that I do love the podcast. So that is a great listen. So I highly encourage everyone to follow and to listen to that one. And so next slide, please. So in addition to developing high quality standards, the IESBA places significant emphasis on adoption and implementation. Our adoption and implementation, our ANI working group, it has 5 board members and staff support with currently John and I assisting the ANI working group. The ANI plan had 3 pillars: advocacy and engagement, capacity building through collaboration, and monitoring progress. Effective implementation is essential to achieving the intended outcomes of the standards and supporting the public interest. So this does include supporting stakeholders in understanding and applying the code in their respective jurisdictions. So phase 1 of the ANI for sustainability standards in particular focused on jurisdictional prioritization and profiles, looking at some key jurisdictions that were making movements with adopting the ISA 5000 and thus would also be good indicators for support with the IESA. And moving forward, we're looking at creating a partnership framework to try to leverage our resources and to work more collaboratively with other institutions, jurisdictions, et cetera, to help us expand our reach and support. So there's active implementation monitoring mechanism for IESA. So there's a good working group that is taking real live questions related to the IESA. And so that is also available on our website. If there are specific questions about the IESA, that goes to an expert panel group to work through. And of course, this is all through close coordination with IFAC and the IAASB, as well as other stakeholders. And so overall, the objective of the ANI working group is to help support high quality, consistent implementation of the IESBA code across all jurisdictions. And so with that, I think I will turn it back.
Thank you, Elaine. Natalia, did you want us to pass it back to you, or would you like us to address a few of the questions that are in the Q&A box there? Sorry, you're on mute, Natalia.
We cannot hear you, Natalia.
Can you hear me now?
Yes.
Yeah.
Yes.
Oh, okay. Sorry. Thank you very much, John, Sylvia, Elaine, and Jan, for such an informative and insightful presentation. And we're just perfectly on time for a Q&A session. We have 20 minutes to go for the Q&A, and we have three questions in the questions answers box. So I think we can start with the first question. I may read the question for the translators. So the question is, what is the role of the International Ethics Standards Board for Accountants in regulating auditor independence? When did the ETGA independence provisions become effective? And how do the quality management standards affect group audit engagement teams? So that's three questions in one. And over to panelists.
Maybe I will jump on that, given that I believe these questions arrived during the ETGA session. Indeed, these are three quite broad questions, so I believe I will try to address them with the lens of focusing on the group audit independence. And as I mentioned, the ETGA standards came into effect in December 2023, so those are applied to audit engagement starting on or after December 15, 2023. And really the connection, as I mentioned, with the ISA, so the ISA 220, ISA 600, is that all those IASB standards require the practitioners or the engagements team and engagements leader to comply with relevant ethical requirements. And these relevant requirements are those that are set out in the IESBA code, and especially in the international independence standards. So when someone is performing a group audit engagement, they need to comply with the code, and there are now a specific section for group audit engagement in section 405 that provides or sets out what are those relevant ethical requirements in the context of a group audit, especially when they are performed in accordance with ISA 600. I think there was a question on the ISQM1 as well, which I wouldn't go into into that, given that it's not our remit, and also because we don't have such a long session here. So I hope that satisfies the questions.
I might just add one thing. It is a more of a broader concept, but the first part of it asks about what's our role, the IESBA's role in regulating auditor independence. I guess we just maybe make the point that so we obviously develop and issue the standards at a global level. But we have no role in like enforcement or monitoring aspects because we're a global international body essentially. So we don't have mandate in particular jurisdictions. So jurisdictions then adopt the standards, whether it's through a professional accounting organization, a jurisdictional standard setter, it might be a regulator. And then either they have the regulatory aspect of the independence aspects in terms of monitoring enforcement, or it may be a separate regulator. It really just depends on the jurisdiction by jurisdiction. But just to emphasize that the IESBA doesn't have a mandate or role around regulation. We set the standards and then the jurisdictions ascertain or work out how that gets regulated at a local level.
Thank you very much, Sylvia. Thank you, John. And we have one more question from Svetlana Zubilevich. Thank you for the opportunity to participate in this event. This is an active involvement. There is an active involvement of audit firms in developing sustainability reports for companies. At the same time, the level of awareness among the company's own employees regarding requirements such as ESRS remain low. That the new section of the International Code of Ethics provides sufficient protection against the self-review threat.
I'll have an initial attempt at this, Sylvia, just to give you a break, because I think the next question is going to be directed at you as well. But if I miss anything, please jump in at the end. So Sylvia sort of briefly mentioned in the ISR there is a new section, which is section 5601, which talks about sustainability data and information services, essentially. And one of those types of services would include the preparation of sustainability information or sustainability disclosures. So the section is very much mirrored on the existing provision in the extant code around audits and the provision of accounting service, essentially under section 601. So it's very much mirrored on that. And so what it's essentially saying is if there is a self-review threat in terms of whether the preparation of that information is going to affect the what you're going to be assuring, essentially. And so the response depends on whether you're a public interest entity, or sorry, the client is a public interest entity or not. So if it is not a public interest entity, then the service is permissible, but only if it is routine and mechanical type service, which is very similar to what when we were talking about the accounting services as well. So it has to be either routine and mechanical, but you also need to put in safeguards to address any threats. So it is permissible, but probably in very minimal sort of situations. Whereas if the client is a public interest entity, then that service, if there is a self-review threat or whether that service might affect what you're assuring, then that service is not permissible at all. So it's prohibited. So that's pretty much it in a nutshell. But Sylvia, let me know if I've missed anything there.
Nothing else will add. Absolutely spot on.
Thank you very much. So we are moving to the next question in the chat box. This is a question from our colleague Andrei Busuyok. Would you kindly elaborate on why sustainability auditor and financial auditor would be in conflict? The entire idea of standards developed nowadays by IESB is to see these reports and information interconnected. So the same auditor, audit firm, would only gain benefits if sustainability information is connected to financial one, and the audit looks at both. Over to panelists.
I will take that one, and I think absolutely we also agree with the IESBA side that if the auditor is providing the same services, there are several benefits for the same firm providing both engagements. So we are not stating that there would be any kind of conflicts, not at all. It's really on the decision of the jurisdictions who can provide the sustainability assurance engagements. So I think what we mentioned, that the standards acknowledging that there will be some issues arising when the firm provides both engagements. And that's not a conflict. It's just simply, for example, as I mentioned, there could be some considerations regarding the fees. And if the firm receives fees for both engagements, that is something that the auditor needs to consider. So the auditor needs to operationalize both parts of the code that applies to the firm with respect to the audit and respect to the sustainability assurance engagement. But there is no conflict at all that we are saying. The other example I raised is regarding the long association of the personnel. So there might be circumstances when the personnel in the firm participates in both the audit and both the sustainability assurance engagement. In that case, they need to consider the time spent in both engagements. So it wouldn't allow them the possibility to prolong the stay with the same client just because they are providing different engagements. So this is what we meant that the IESA really addresses this situation, and it doesn't mean that there would be any kind of threats to independence or any other conflicts if the same firm provides both engagements.
Thank you very much, Sylvia. So we have responded for questions which were in the chat box. Let us also see, I think that there were no additional questions in the general chat. So then let me use this opportunity to ask my questions to the panelists, which relates to AI. Since AI and other digital tools evolve rapidly, what are the primary ethical risks the technology working group is focused on? And how does the revised code guide practitioners in using these tools responsibly?
Thank you for the question, and I will respond to that. So some of the risks that the technology working group has particularly focused on include the accountability and responsibility. So clarifying that aspect that responsibility cannot be delegated to the technology. Also, the over-reliance on technology, that automation bias. Practitioners may accept AI outputs without sufficient challenging or that professional skepticism, asking those questions. Transparency, explainability. Some data-related risks include data quality, bias, privacy, as well as these competency gaps that we spoke about as well around having the sufficient understanding of the tools that they're using. But again, you don't have to be a data scientist. You just need to ask those questions, and having that inquiring mindset forms the foundation. So the code does address these risks through the existing ethical framework, and I've spoken to that already, but applying the conceptual framework to identify, evaluate, and address threats arising from the use of technology. So it's having that competence and due care, having that understanding of the capabilities, as well as the limitations of the tool that's being used. Exercising that professional judgment, upholding confidentiality, but also ensuring that appropriate documentation and accountability for decisions are supported by the technology. So overall, the approach is to ensure that the ethical principles maintain technology neutral but robust, but while continuing to monitor these developments and consider whether future, more specific guidance is needed is also being considered at the moment. Thank you for the question.
Thank you very much, Jen, for a great answer. And I cannot help asking this question about the education and professional development. Since the standards are most effective when practitioners deeply understand their purpose, not just technical requirements. So what role does IESBA expect educational institutions and professional bodies to play in embedding the revised code into ongoing professional development? And is IESBA itself producing educational materials or any platform to support this? Thank you.
Thank you. I will also respond to the question. So from an IESBA side is the expectation is, and John referred to when our standards are being adopted, that is the responsibility of professional accounting organizations and educational institutions to take and embed the revisions to the code through ongoing development like CPD programs that they do have in place. But the emphasis isn't just on teaching the rules, is having those discussions, highlighting some real challenges and creating awareness and accessibility and uptake, but also to not, if there's any gaps as well. So PROs and universities are expected to have kind of assist with that ethical judgment and mindset that we spoke about, explain the purpose of the principles of the code, but also help practitioners in applying in real world scenarios. But IESBA is not dormant in this space. So we do also provide a wide range of education material. Sylvia referred to it, where our website actually contains a lot of non-authoritative material out there. There are slides available or webinars, recordings through the YouTube channel as well. So there's a lot of support material to unpack these principles that's embedded in the code and to bring it to life and that's done through questions and answers, documents, some summaries or changes, summaries of the provisions. I mentioned webinars and video series as well, but also case studies and implementation guidance. There's a broad range of resources available, and everything is available on our website. So we don't provide detailed training because that's not within our remit, but we do provide tools and insights to assist organizations in unpacking or understanding these principles. I don't know if any of the others would like to jump in as well.
John, I might also mention that the Adoption and Implementation Working Group has also been making great strides in reaching out to professional accountancy organizations as well as other stakeholders. And so if there's some interest in, getting access to some of that information or being, pointed in the right direction, we're happy to help. As mentioned, that partnership framework that we're building, we're looking at ways that we can reach out to other stakeholder groups and better provide support. And then, of course, the work that we're doing and trying to just bring jurisdictions up to speed with adoption and implementation and moving towards getting onto the latest version of the IESBA code, I think is really something that we're very proud of, and IESBA has put a lot of work into.
Yeah, thank you very much, Elaine. I would look also just add, I guess, this today is a great example of being able to get that information out there. And if there there's further demand for us to sort of dive in deeper into particular topics or areas, in conjunction with WorldBank and the CFRR, we'd be certainly open to that as well if there's a future demand for any of those sort of deeper dives into some of the stuff we've covered today.
Yeah, thank you very much for answering this question and sharing this information, which is really very important for professional accountants organizations. And also I would like to highlight the role of universities, because the professional path starts at the university level, and what we observed in many participating countries that at the university level, sometimes the gaps specifically relates to ethics code implementation in the curricula of the university. So that is why it's very important to have universities on board in this education process. So we have 3 more minutes, and looks like we have one more question in the Q&A section. Yeah, so ESA implementation. The ESA is designed to be profession agnostic and framework neutral, but in practice, sustainability assurance engagement involve a wide range of professionals, accountants, engineers, and environmental scientists. Does IESBA envision a mechanism for enforcement and accountability when non-accountant practitioners perform assurance work but are not subject to IESBA's jurisdiction? Over to panelists.
I think I will just give it a start and quickly respond within these 2 minutes. So indeed, the ISA is profession agnostic, but it's, as John mentioned, it's not within a remit to require or set out for jurisdictions how they apply the standards. So it's really in the jurisdictions, the specific regulators, lawmakers to decide who they allow to the market, whether they would allow sustainability assurance engagement to be provided by others than the auditors or professional accountants, just as in the example, like engineers and others. But if the jurisdiction decides, allows these sustainability assurance practitioners who are not professional accountants to perform the sustainability assurance engagements, the ISA is there. So it can be applied by everyone. And precisely the purpose is that if the jurisdiction decides to open the market, those who are using these reports can be ensured that the practitioners are subject to the same ethical requirements. So there is no fragmentation based on their profession. But again, it's not within IESBA remit to enforce that issue. It's really just we provide the standards, and it's within the jurisdiction's capacity to decide who can provide the specific services.
Thank you very much, Sylvia, for great and brief response. And just as a brief conclusion, that I liked very much the example used by John of a 3-ledge stool, a simple but really powerful metaphor of the architecture of a well-functioning financial and sustainability ecosystem. The 3 legs are reporting, assurance, and ethics. And just as a stool cannot stand if any of these legs is missing or weak, the integrity of the entire system depends on the strength of each component. And perhaps ethics is in many ways the most fundamental of the 3, because it's what ensures that the professionals behind both reporting and assurance act with integrity, objectivity, and a genuine commitment to the public interest. So without the robust ethical foundation, even the most sophisticated reporting framework and the most rigorous assurance standard can be rendered meaningless. And this is why the work of IESBA matters so deeply and why today's session has been so valuable for our participants, for sure. So we hope today's conversation has offered both clarity and inspiration for the important work that lies ahead. And before closing this session, I would like to ask all the participants to take a moment to complete a short survey on today's event. And your feedback is extremely important to us and helps us improve further our sessions. And the QR code is displayed right now on your screen. So please scan it and complete a survey, which will really take you not more than 2-3 minutes of your time. And before closing, I would like to thank once again our panelists, our participants, and also interpreters and the whole team that worked together to prepare this informative and insightful event. And we look forward to see you at our future events. Thank you very much. Thank you, colleagues and panelists.
Natalia, sorry, just a small minute to also to thank our generous donors, partners, the European Union, the Austrian Federal Ministry of Finance, the Swiss State Secretariat for Economic Affairs, SECO, and the Austrian Development Association, because without their generous support, we couldn't be able to arrange this regional knowledge sharing. So this is possible because of all of them. Thanks again to IESBA, to the CFRR team, and to everyone that participated today. Thank you very much.